Welcome to the Bitcoin Beat with Shaun and Jeff. I'm Shaun. This is my co-host Jeff. And we got another fun episode for you this week. We're coming off of last week's episode where we talked about some of the quantum coverage, some of the fear, uncertainty, and doubt that was surrounding some quantum fears. And this week, of course, we're going to talk a little bit about what Saylor's doing. We'll go and dig into the gold and Bitcoin ratio chart a little bit. But more importantly, we're going to cover some news that's been going pretty crazy on social media regarding a Ledger hack. And is it really a hack on Ledger? Stay tuned. We'll talk about it. And the key takeaway for you to watch for is how you can absolutely avoid falling victim to one of these scams. Jeff, are you excited to chat this week?
Yeah, it's great to be here again on the Bitcoin Beat. This is our Monday mailbag, and every week there's something coming up in this space. And so Shaun and I are here to just kind of unpack what's going on for you all today.
Yeah, I'm excited. Well, let's get this kicked off and start with what is the big news and Saylor on Sunday.
Hold on. Before you do that, Shaun,
yep.
Bitcoin's pumping off its lows. It looks like you've been pumping a little bit too, man.
Yeah, I just hit the gym before we started our show. I think you got back from the gym too, right?
We got to do it, man. We got to get those gains.
Got to get them in before our vacation, right?
Indeed. Before the Bitcoin conference.
Yeah, I'm excited for that. Wanted to talk about one of the guys that's a pretty popular figure at the conference, Michael Saylor, and just yesterday sharing the screen where he, on Sunday, talked about think even bigger, and he had another one of these orange dots. But it's a little misleading because he ended up buying quite a bit. So he's not taking the advice from Peter Schiff, and that's to sell all Bitcoin and get back into cash and buy something a little bit slower like gold. But he's actually buying more sats, and he's buying more than's being mined. So he's, as a strategy as a company, they're up to 815,000 Bitcoin. They bought over the last week 34,000, a little over 34,000 Bitcoin in just 1 week. That's pretty insane to think about, considering that only like 450 are mined a day. So if you watched our episodes in our show, you know I like digging into what the numbers mean, what it means going forward. So for 2026, Jeff, he ended up purchasing over 142,000 Bitcoin just this year alone, which if you average that out on a weekly basis, that's just a hair over 9,500 Bitcoin every single week. And so extrapolate that out. Last week we talked about where they were aiming, and they were going to be right around Halloween where they'd hit 1 million Bitcoin for strategy. Well, with this massive purchase, which is about 3 times more than what they had been averaging, factoring that in, they'll actually hit 1 million now, not at the end of October, but at the beginning of September. I have it marked as September 3rd. If they just keep on the current path, which is the average for the year of 9,500 Bitcoin a week. What do you think? Do you think they're going to hit that target of September 3rd? Are they going to slow down? Are they going to ramp up? What's in the cards for strategy?
Yeah, I think we've talked about the timeline for them to hit 1 million. And I think a few episodes ago, we were estimating the end of the year around November. Then we bumped that up to September, October timeline. Now it looks like it could be even August. So it's amazing that he's able to do this. And in one of the other tweets that you shared, he said 3 things, 3 words: think even bigger. And this is an amazing statement. He's basically daring public company CEOs to make a fiduciary attack against fiat like he is. He's daring them to do that. Think even bigger. And I love that statement.
Yeah, and they're definitely thinking big, that's for sure. Every week when he makes some kind of post or comment, he has something funny with it too, normally like an AI generated photo. I think this week was a huge orange ball coming into frame as people are running away from it. And yeah, it's hard to believe, but imagine that he has weeks out there where he's going to buy more than 34,000 in just a week. And that's mind-boggling to think of, and how just the market share that they're gobbling up on a regular basis. And obviously, newsflash, when he hits 1 million, it's not like there's going to be a cap and he's going to stop. He's going to continue buying because it's the reserve asset. So he wants all their funds to sit in Bitcoin. No cash. They have enough cash to cover dividend payouts, so they can guarantee their commitment going forward. everything else goes into Bitcoin. And that's not going to stop at $1 million. It's not going to stop at some arbitrary number that we keep focusing on.
Yeah, I think it's 4% of the total supply right now that he owns.
Yeah. And once they get the $1 million, that'll be pretty much the 5%. And who knows how much higher they can go. One interesting thing we had talked a little bit before the show, and I think yesterday a little bit, was this proposal that Michael Saylor and Fong Li had for the company. They were proposing to move their Stretch product, the really popular product that pays a pretty large dividend right now, and they try to peg the price at $100 per share. They're going to be moving that to 2 dividend payments for return on capital per month instead of just 1. And I had a post here that I shared. I think that this is targeting one specific thing. Now, granted, if you watch the presentation, they talk about all the benefits from it. We'll get into some of those weeds here real quick about liquidity and keeping the peg where we want it. But I think it's all because of this popular move that people are owning Stretch. They stay a record holder on the ex-dividend date and then sell to rotate into Strive's product, the SATA. And they stay there until they're recorded as a shareholder for the ex-dividend date. And then they move on back over to Stretch. That allows them to collect that payout, that dividend from both with the same amount of capital. And I think that's been causing some issues that basically force them into thinking of a way to fix this problem. And one of the problems is, if I can find the chart here, this one right here, on their tweet for their presentation, you can see how right before the record date is when they have the most liquidity. There's people that are moving in, and as soon as they're recorded as a shareholder, they drop. And this then forces them to have a drop in the average share price, and then it quickly kind of rebounds once people get back in. And for them wanting to keep the peg at $100 a share, that makes it very difficult. So let's talk about that. You have a little bit more insight on how that process works, what kind of things they're thinking of. Although I think it's because they're trying to stop that rotation, that I call it high yield farming loophole. There are some other benefits they get from that.
Yeah, so this is actually something that came up on my radar too, and you did a pretty good job outlining the mechanics here. But once again, for listeners who aren't really familiar with the process, if you are a STRC shareholder or SATA shareholder or any stock really that pays a dividend, you need to be an owner of record before the ex-dividend date. So today is April 20th. Let's just say hypothetically today was the ex-dividend date. You will have had to own STRC prior to today, so yesterday. And if that's the case, then you would qualify for the dividend, you would get the dividend. And in a lot of cases, what people are doing is they're just purchasing STRC before the ex-dividend date. After they get that dividend, then they're selling. And so it creates this dynamic where you don't really have that long-term liquidity that I think strategy is trying to provide to this. And what happens is then STRC unpegs from its $100 mark, right? Michael Saylor has been pretty clear that their goal here is to keep STRC at 100. So really, essentially, if you're not quick enough to sell after the ex-dividend date, and you sell, if that peg breaks and goes below 100, let's say it goes down to like, I don't know, 97 or 98 or whatever. I don't think it's gone that low, but, or no, I know it has, but they're trying to keep it at 100. But anyway, you're eating into your dividend profits if you're selling the underlying at a lower price. So I think this is just a basic way of smoothing out some of that volatility. We'll see if it works. I don't know. Like it could have, you never know what the consequences could be of something like this. If I were to program an algorithm, I would want to program the algorithm to purchase STRC right before the ex-dividend date, and then try and sell it before the selling occurs, and then buy it back when it goes back to 100. So I don't know. We'll see. I think this is a good idea, and we'll see if it works.
Yeah, that's interesting. That's kind of like arbitraging the peg as opposed to the yield, kind of the counter play that everybody else is moving into. I also thought this was genius. In my mind, I thought that this was a way that strategy is fixing that volatility problem for both SATA, Strive's product, and the strategy product Stretch. And then I have to be kind of disproven when the CEO of Strive here says, should Strive increase SATA's dividend frequency to twice a month as well, but stagger it on the other weeks that Strategy is doing it? Which in reality, if they do that, that means if you hold a little bit of each, you'll have a dividend payout, a return on your capital every single week, 4 times a month. But this would still keep that yield farming loop open. Now, granted, there's a lot more that you lose in the spreads, and if you have fees and some other concerns with timing it, when like you said, the price dips a little bit and rebounds. But it could keep that yield farming open if that happens. I don't know. What do you think? My opinion is I think Strategy's proposal is happening. I think most of the shareholders of Strategy and Stretch and all their products are pretty in line with what Phong Le and Michael Saylor recommend for the company. So assuming that happens, do you think Strive would end up doing the same?
I think, again, if you're going to think bigger, then you're going to figure out how to get some of that capital from the fixed income market and use Bitcoin as collateral to guarantee some sort of dividend. But here's what I know. Asymmetry exists before certainty. And psychologically speaking, most people want certainty. So they're very happy collecting, an 11% dividend. Granted, that dividend is a variable rate, so it can change. And I do anticipate if this product succeeds, that dividend will gradually go down over time. But going back to my original comment, asymmetry exists before certainty. And we know that Michael Saylor, you and me included, because let's face it, we were in Bitcoin before Saylor, we understand this asymmetry. So we don't really want to give up a 200, 300, 400, 500% return for a fixed 11% dividend. Now, granted, there are different buckets, and you might have a strategy for a dividend strategy, and you might have your HODL for that exponential gain. But if you're trying to, look at it in a binary way, like, should I just buy this preferred share and get the 11% dividend, you're giving up a lot of the potential upside. And you're also not utilizing digital asset realities, right? You can't trade Stretch over the weekend. You can't trade it at night. You can't send it to your own self-custody wallet. So this is a product for investors, all investors. This isn't, I would say, a Bitcoiner's product, although I know a lot of Bitcoiners who are in it, and that's fine. Again, different buckets for different investments. But think about the S-curve, right? Where are we at on the S-curve adoption? And if you're like me or someone like Jack Mallers, who's predicting Bitcoin hits $1 million this year, you could be missing out on a lot of upside if you're really focused on collecting 11% dividend because you're afraid of a little volatility.
Yeah, you're not wrong. All these products that are kind of all the rave right now because they're getting into the bond market, they're taken from these fixed income markets. The trade-off is you're capped on the gains. And that's kind of you may not have that volatility to the downside, so you're not losing. But then if Bitcoin does ever hit $1 million this year, next year, whenever, you might miss some of those big moves. That's interesting. I couldn't agree more with you on that. There's definitely things to be weighing about and considering, like you said, the buckets and percentage and weights. Just because it's a strategy product doesn't mean it's the best fit for you.
Totally. Yeah. And everybody has a different circumstance, right? Yeah. I think this product really attracts people who need income. You think about the boomers who are on a fixed income and they need that capital coming in to pay for bills and stuff. That makes sense. But if you think about that, that college student or that high school student who is just starting to get some investable income and they have a long lifespan ahead of them, I would certainly recommend Bitcoin to them first before diving into a product like this.
Yeah, absolutely. And Michael Saylor would recommend that too. He's the one marketing his products. So yeah, it's a very good point. I want to transition. You had posted your weekly update on this gold and Bitcoin ratio. What's important to know from what's happening there right now?
Yeah, so we've been tracking this since February 28th, and this is when the military conflict in Iran really escalated. What's really fascinating about this is the divergence continues to expand in favor of Bitcoin. So when you think about war, or you think about any kind of catastrophe or times of uncertainty, Bitcoin has been lumped in as a risk on asset. It sells off. And granted, we're cherry picking our time frame here, but again, we are starting this when military conflict escalated in Iran. So right now, Bitcoin is up 15% from that date, from February 28th. Gold is down 9%, and that's a 24% spread. And we've been tracking this. You can check out the post, and you can see every week how that spread has changed. To me, again, this just speaks volumes of the properties that Bitcoin has that gold doesn't, and the adoption that Bitcoin is going to continue to see as people realize that Bitcoin is truly a neutral asset that is permissionless. It's hard to confiscate. It's easy to secure. It's easy to send. It's divisible. All those things that make Bitcoin a superior neutral form of currency as opposed to gold, which is more centralized. It's harder to move. I think that over time, Bitcoin is going to catch up to gold's market cap. In what time frame? I have no idea. But as more people realize what Bitcoin actually is, they'll understand the trade-off makes more sense to move into Bitcoin.
Yeah, I couldn't agree more. That's really interesting how every time we jump into that chart and that ratio, it has been climbing pretty steadily, and it's not just by small jumps. 24 points in just this short amount of time that we're talking about since the conflict started is in investment terms a short amount of time, but that's a pretty big gulf, especially when you look at it on the chart, just to see how it keeps getting wider and wider.
Yeah, we can talk more about this in our next episode, so I won't give any reveals here. But I think in the future we should look to at a longer time frame and just see what Bitcoin does when it underperforms gold and when it underperforms the S&P 500, and in times when it overperforms, just to help people see how Bitcoin responds to different market regimes. And as we know, the market's always changing. It's very hard to predict the future, but it's definitely important to prepare for it, which is one of the reasons why we're here today chatting.
Yeah, I think a lot of our viewers would like that. I know I would like digging into that, so we'll definitely keep that on our radar. Well, the big news I wanted to kind of dig into a little bit so you and I can help our viewers out is a lot of this news coming around from, I think it was 9 or 10 days ago, and it was this, what everybody's calling a ledger hack, where more than just one person lost Bitcoin with what happened here, but the one that everybody's talking about is this guy named G-Love. And he ended up losing, I think, 5.9 Bitcoin from this scam. And here's his post. I'll pull up exactly what he said, and we'll talk about really what happened. The important part for our viewers to take away, but he mentions this here. I had a really tough day, lost my retirement fund in a hack scam when I switched my ledger over to my new computer. Keep in mind, we'll talk about that. And by accident, downloaded a malicious ledger app from the Apple Store. All my Bitcoin gone in an instant. Number one, that's rough. That hurts. But he does in some of the comments, if you were to dig into it, he understands really what happened. But he mentions it, he hints at it in this post, where he switched his ledger over. Now, a key concept when we're talking about cold storage, hardware wallets, it doesn't matter if you have a new computer or not. Your protected seed phrase, your 12 or 24 word seed phrase, is always on this hardware device. It doesn't matter if you have a laptop, a computer, Windows, Mac. The whole idea is that secure phrase you entered into the hardware device. And what he ended up doing is he downloaded Ledger Live. For any of us that have used the Ledger cold storage wallet, the hardware wallet, we generally pair it to the Ledger Live so you can see and move and get addresses on a software display. Well, he downloaded one that looked legitimate, and this isn't something you do on a regular basis. How often, do you, the viewer, get a new computer? It's pretty rare. And when you do, you're kind of moving everything over. It takes time, a little bit of stress involved in it. And, okay, so I want to re-download Ledger Live. And I know a lot of people are taking dunks on G-Love here and these other people that got scammed, but I could see that being a normal process where, please enter your 12-word phrase. Well, yeah, I'm moving to a new computer. It's the one time, in every 3 years that I need to, confirm I have this account, whatever. You type it in, and then poof, it's gone. And just the confusion that sets in, it's a horrible feeling. But the important part is these devices are set up in a way to where you never need to enter that online. And before we dig into, I have a post from Terrence that really spells this out. Before we talk about how the user can protect himself, what kind of takeaways do you have on this hack or scam that G-Love and others had kind of fallen victim to?
Yeah, there's a lot to unpack here. First, I guess I would just say, G-Love, I'm sorry this happened. My heart goes out to you, man, for this. This is an expensive lesson for sure. Especially when you're using an app that you can download from the Apple, App Store. You would think that it would be a trusted app, right? That Apple wouldn't just let some nefarious actor or bad app onto their store. But the lesson is that's not true. So be very careful. The second thing is there's a difference between a hot wallet and a cold wallet, right? So if you have a self-custodial hot wallet, a Bitcoin wallet, you are connected to the internet. In this case, the ledger is a cold wallet. So it's offline. It's not connected to the internet. If you're using a cold wallet, you should never enter in your seed phrase when it's connected to the internet, to any kind of app or any kind of software. You want to use that device offline to enter your seed phrase to restore that device. I had this happen once where I had an old ledger. I got a new ledger. The old ledger, after several years, just stopped working very well. So I entered in my seed phrase to the new ledger, and it was totally offline. It was safe. It was secure. So learning how to do this is the difficulty. It's not that these things are inherently insecure. Actually, they're the most secure. It's just the processes that people take to, restore their devices are fraught with, hurdles and problems and pitfalls that sometimes aren't as easy to avoid as you would think. And I know there's a lot of education out there now. You mentioned Terrence. He's someone who I would trust with education. I know the BTC mentors. They're also people who I would trust with education. So do your research before you just start, restoring devices or moving coins from one device to another. And I'll just leave it at that for now.
Yeah, and I'll reiterate what you said. And this is something that you and I both instantly kind of understood. Terrence had an interesting way to put it to make it very simple. And this is kind of the takeaway I think any viewer should take from it. This applies to any kind of scam like this. It doesn't have to be Ledger. It could be a Trezor. It could be a cold card. It could be really any of these products whenever you interface with anything online. His key point, his key takeaway is right here on this tweet. The cautionary tale is that your keys, so that's your seed words, the 12 or 24 word phrase that you use as a recovery phrase, should always remain offline on your device. There is never a situation where you as the user will need to put those 12 or 24 words into software on a website. Those are designed to keep that offline, not connected to the internet, and it shares through other security measures your actual private key without your actual seed phrase being exposed.
Yeah, so with a cold wallet, and that's the key. That's the distinction. With a cold wallet, you don't need to be on the internet to enter your seed phrase. But if you're using a hot wallet, I know a lot of Bitcoiners like the Blue Wallet. It's a great app. In fact, I highly recommend it for new Bitcoiners that just want to use a mobile wallet for the first time and maybe experiment with Bitcoin. You're going to have to enter your seed phrase inside the Blue Wallet app, and you will be connected to the internet. But again, it's a trade-off, and there is higher security with a cold storage wallet than there is with a hot wallet. So just be mindful of that. I would recommend when you get to a certain level, when you've stacked enough sats and you say, I have a significant amount of Bitcoin that I can't afford to lose, you really want to consider getting a cold storage wallet at that point.
Yeah, I totally agree. And, there's Bitcoin meetups all around the nation. If you're local here, obviously you may have had a chance to talk to me or Jeff or other Bitcoiners. If you're curious, confused, wondering how to do it, everybody's a good resource. None of us will ask you questions that are going to put you in danger. We'll just answer questions you have, and we can help you walk yourself through it. But I couldn't agree more. The cold storage is really the best way to be able to do that. There's different trade-offs for other products, but the key thing is don't get scared from all these comments, all these news stories, all these influencers talking about the sensational, oh, Ledger had some issue again. It had nothing to do with Ledger. It was one of the most popular devices out there. So a lot of people are trying to mimic and attack it. And yeah, the key thing is if you're using that cold storage, you don't ever put your seed phrase in anything but that cold storage. Well,
indeed.
Just going to wrap up. I want to mention to our viewers that we're not going to have a show next week, at least a regular show, kind of like how we're doing this, because we got the Bitcoin conference coming up. So we're just a week away. Next Monday will be day one. And Jeff and I will be a little bit busy. We'll probably be counting cards, playing blackjack, or doing something. Actually, we'll probably be meeting with people and having a good time. But we might have some content coming out, some kind of update to give you and our viewers. But just bear with us. It'll be a little bit of a unique experience since we'll be busy. Hopefully we see a bunch of you there, though. And before I turn it over to you, Jeff, for some closing comments, I did want to ask the viewer for a favor. Our interview with Dennis Porter that we've talked about, where we go over the Mind in America bill that's being proposed in the Senate, we have over 3,000 views now. If you haven't seen it, do us a favor, check it out. We put a lot of effort into it. We thought it was a really good discussion with Dennis Porter. Check it out, like it. If you have feedback, we absolutely love feedback, but do check it out. We'll have it linked here at the end of the video so you can see it, or you can find the link in the show notes below. But help us out and take a look at that. Jeff, any closing comments before we close out this week's show and get ready to hit the road for Vegas?
I'm excited for Vegas. It'll be a great time to connect with other Bitcoiners. It always is nice and refreshing place to be with like-minded individuals who understand the significant importance of Bitcoin, and even those who don't. So if you're there and if you see Shaun and I and you'd like to say hi, don't be shy. We'll be there. And Shaun will probably be in another muscle shirt showing off his guns, which I don't know if it's legal there. Oh, no. Vegas, actually, Nevada is an open carry state. So I think you're safe.
Maybe I need sleeves because it's on the casino floor, but we'll find out. I'm pretty recognizable, and honestly, so are you. So yeah, walk up and let us know. Say hi. We might look scary, but we're pretty friendly people.
Indeed.
All right. So we'll catch you on our next episode. And hey, if you don't have any Bitcoin, get off of zero. But if you do have Bitcoin, keep stacking sats. We'll see you at the conference and see you at the next episode, everyone. Have a good day.